Mimila, you got 5 after 10, whenever you're ready.
Okay. Good morning, everyone. We're going to get started here this morning. We have our beloved Julius, who's going to be talking about substantial damage in practice, what that means for a local floodplain administrator. So with that, I will let Julius take over.
Cool. Thank you, Amy. Good morning, everyone, and welcome to Substantial Damage in Practice. I'm Julius Lockhart, as Amy alluded to. I'm the lead floodplain management specialist for the state of Tennessee, and today we'll be going over substantial damage. What does it mean for you as a local official, as a participant community in National Flood Insurance Program? I have two short PowerPoint presentations to kind of set us up so that we could get into the SD tool, because I want you guys to kind of have a background on how the substantial damage estimator tool operates. So when you do utilize it for events in your community, so let's say if there's a flooding event in your community, or there's a train derailment, or wind, or an earthquake, or tornado, and those structures that's located in a special flood hazard area impacted from that particular event, you have to go out there and assess that building and determine is that building substantially damaged or not. So substantial damage is one of the hardest parts of floodplain management that a lot of communities struggle with. So today, I'm hopefully at the end of this training, you kind of have a better sense of how substantial damage actually operates when there's an event in your community. So two short presentations, then we're going to get into the tool. Typically, this training is typically half a day, and it's really more of an in-person type of training because we really want you guys to practice utilizing the SD tool. So the SD tool is what FEMA has created to give local officials and local communities a resource to help them to make those determinations, because we understand the challenges of making substantial damage whenever there's an event. So I'm gonna give you guys the background information with the two PowerPoint presentations, and then we're gonna get into the SD tool, and then we're gonna open up for some questions. So if you have questions, feel free to put it in the chat. Amy will keep track for me, and then we'll answer the questions at the end. And when I open up for Q&A, if you want to come online and ask your question or put in the chat box, feel free to add questions. There is no stupid question. Ask your questions. That's why we're here. Amy does a great job over the last 9 years working with all 402 communities with regards to substantial damage, floodplain compliance, engineering analysis, mapping, compliance workshops, and training. So this is just an additional resource with the monthly webinars to kind of educate you guys and let you guys know, hey, don't forget about us as we transition from the pandemic and getting back into the groove of things with in-person trainings and workshops and traveling. We still want to keep up the momentum with the monthly webinars and let you guys know, hey, that's an additional resource that you have every month for various topics. So this month for March is about substantial damage. So welcome everybody. Glad to be here. I'm always glad to support the state of Tennessee and to support Amy as we continue to advance floodplain management in the great state of Tennessee. All right, next slide. Sorry guys, 1 second. Okay, so we know sometimes a lot of you guys are brand new to floodplain management. So I always like to kind of give a background to the National Flood Insurance Program. Some of you guys may have heard about this. Some of you guys may be brand new if you're a new floodplain administrator, just to get everyone on the same page, speaking the same language about the NFIP program. So the program was created in 1968 by the National Flood Insurance Act. It's a voluntary program that communities join. When they join the program, they adopt the NFIP regulations that come from 44 CFR section 60.3. And as a trade-off, they become eligible for flood insurance. So all you guys on the call today are all participate in the National Flood Insurance Program. You have all joined at various times, whether that's in the 70s, 80s, 90s, 2000s, early 2010s. Whenever you join the program, flood insurance becomes available for everyone in that community. So that's both your renters, property owners, commercial business owners. As long as that community is participating, you're eligible for flood insurance. So what are the benefits of being in the program? You get flood insurance, you get grants and loans. So whenever there's a disaster declaration like the ones we had in Waverly, you get what we call hazard mitigation, HMGP, hazard mitigation grant program becomes available for the community, as well as public assistance, individual assistance. So all these different grants and disaster assistance become available. If you have a federal backed mortgage from the VA, HUD, all the stuff is also available for your community because you participate in the NFIP program. If you're not participating in the NFIP program, everything else is not available. Flood insurance, grants and loans, disaster assistance, federal backed mortgage. So that's why it's so important that when Amy and I reach out for technical assistance or workshops and trainings, is we want to make sure that we keep all our 402 communities in compliance with the NFIP program. So what are the goals of the program? Save lives, protect property, and to have a comprehensive approach to floodplain management. Every community has their strengths and weaknesses. Every community has things they do great, things that they need to work on. So we try to work with all 400 communities and help you to create a tailor-made floodplain program that's good for your community, because you know the capability, the capacity, and the resources for your community. You have communities that have a lot of resources. Some you only have one person that wears multiple hats. They're the floodplain administrator, they're the zoning officer, they're the building codes, they're enforcement. So we want to make sure that every community understands their role and responsibility, but also helping you to kind of take a comprehensive approach to advanced floodplain in your community to reduce the flood risk in your community. So that's kind of the general sense of the NFIP program. So just want to get everyone on the same page of what the NFIP program is about and how we go about when it comes to substantial damage as part of the comprehensive approach to floodplain management. Roles and responsibilities. So you have the federal. So this is where FEMA comes into place. We provide the oversight of the National Flood Insurance Program. We do the risk identification. So those are the maps that you have, your flood insurance rate maps, your firms, your FIS, which is your flood insurance study. We establish the building and standards. So all our technical buildings, all our resources that we have, we provide technical assistance both to the state, the communities, and various agencies. So when Amy and I have office hours every Monday, this is us providing technical assistance to you guys as the local officials. We provide insurance coverage. So coverage for your NFIP policy. So if you have a policy for your commercial, residential structure, or renter, we provide the flood insurance as well. State, Amy provides the state oversight. So she works with you guys with when it comes to your floodplain regulations, updates and changes, provide technical assistance, training workshops, these monthly webinars that she conducts every month, providing those trainings. We evaluate and document floodplain activities. So whenever we come out and do an audit, community assistance visit, where we auditing your program, saying, hey, how are you enforcing your regulations? Hey, are you enforcing the one for the freeboard? Hey, are you ensuring that no development takes place in the floodway? And if it does take place in the floodway, do you have an engineering analysis to show a no rise? So those are all the things that Amy and I work very closely to continue to support each and every one of you guys to ensure that you remain compliant with the NFIP program. And as a local officials, you guys, Amy and I talk about it all the time. You guys are the star of the NFIP program because you guys have the responsibility for development oversight. Permits are approved and denied at the local level. It's not at the state, it's not at FEMA, it's at the local level. So you guys adopt the official regulations, the minimum standards, and then you adopt higher standards such as freeboard, on-map streams, documentation for compliance. So anything that you adopt beyond the minimum requirements that come from 44 CFR section 60.3 takes precedence over the minimum requirement. So the one for the freeboard, that's the highest standard. So most communities in Tennessee have that one for the freeboard where you build to the base flood elevation plus 1 foot or 2 foot depending on the community. You issue a denied development, you maintain records. So the big thing about NFIP program, you have to document development in your community. So if it's grade and fill, excavation, residential building, non-residential building, you put in a pole barn or accessory structure, you put in a shed in the backyard. If it's located in a special flood hazard area, you have to document it for development, and you also have to maintain those records. Those records could be in the form of permit files, elevation certificate, dry flood proofing certificate, site plans, anything that's pertaining to that particular development that happens in the special flood hazard area. You have to maintain those records for the life of the community being NFIP program. And then the big one, you have to make substantial damage determinations. Majority of the times, communities always feels like substantial damage only happens when there's a presidential disaster declaration. That is only one part of it. Substantial damage pertains to any type of damages that occur in that community, regardless if there's a presidential disaster declaration or not. It could be a major event, it could be a minor event. It may only be one home that's damaged from a tornado that went through the community. If that structure is in the special flood hazard area, you as a local official has to go out there and assess that building and determine is it substantial damage or not. So all oversight starts and ends at the local level. So that's why it's so important for you guys to be on this call to understand your role and responsibility and how Amy and I are able to provide technical assistance, provide trainings, provide workshops to assist you guys. But at the end of the day, everything starts and ends at the local level. So what are some of the duties as a floodplain administrator? So there's multiple duties. You got to review applications, make floodplain determinations, make substantial improvement, substantial damage determination, issue deny permits, review plans, specifications, ensure all permits are documented, notification water course alteration. So you're working in a stream or on map stream, maintain and update the flood insurance rate maps, inspect development, record keeping, remedy violations. So those are kind of a general terms of all the different things that you're responsible for. Today, we're going to focus on substantial damage because that's one aspect that tends to fall in tends to kind of get neglected. I'm just going to be honest with you. It tends to be neglected because it gets very complicated. A lot of times I've heard from communities over the past 7, 8 years is that, hey, I don't understand how to do substantial damage. I only do it after if there's a disaster declaration or if the state contacts me. So we want to make sure that you guys leave here with an understanding that if there is a structure that's in the special flood hazard area, so when you look at your flood insurance rate maps and you see that blue area, you see that candy cane area, that floodway area, if that structure is located in that particular area on the flood insurance rate maps, it is in the special flood hazard area. And if it has received some type of damage, whether a tree fell on it, grandma drove into the building, there was a train derailment and some of the train cars hit the building, there's a fire, tornado, flooding, there was an earthquake, it doesn't matter if that structure is impacted from one of those events or any event in the community, you have to go out and assess it to determine is it substantial damage or not. And you got to keep good records. You want to keep good records because if Amy and I ever call you and say, hey, Tom, over here, hey, we saw that there was a wind event that came through the community. Hey, did any homes got potentially damaged? Tom would say, yes, I went out there and inspected the buildings. I did a substantial damage determination. I notified the property owners that, hey, your building is or is not substantial damage, and those are the requirements that you need to do in order to bring that structure into full compliance with your floodplain regulations. So continue the duties of a floodplain administrator. The big one is training and education. I'm a big advocate for training and education. I'm at FEMA, I'm continually going for trainings. I'm continually learning. Substantial damage is something that you have to continue practicing. And even when you don't have events, kind of practicing how to use the tool, kind of going over the requirements. Because if you don't use it, you forget it. So coming to trainings, the monthly webinars, we have L273 coming up in Chattanooga in May. We have the 3-day virtual training coming up in June. We have the monthly webinars. We have the NFIP 101. That's a self-paced independent study that's available online. So any opportunity you can to come to training, please come to trainings. There's always updates. There's always things that's changing with the NFIP program, floodplain management, that we want you guys to be aware of. Community outreach. Another big one. You want to educate your public, especially if you're going for a mapping update, or if you have folks, especially now over the last couple of years, we have so many people moving into Tennessee, moving into the special flood hazard area that they may not be familiar with the requirements of your community for building in the special flood hazard area. So making sure that you're utilizing whether that's social media, outreach, whether you're using newsletters, PSC announcement, whatever it takes to just educate your residents as well as your elected officials about, hey, we're in the NFIP program. We've been in it for like the last 40 years. Those are the requirements. This is why we get a discount within the community rating system. Or, hey, we have mitigation grants. We want to do some buyouts. We want to do elevation. So making sure that you educate everyone about the need for permits, what are the requirements for building, whether it's in a zone AE or zone A without floodway, or if they're building a zone A with no base flood elevations. Coordination with all the agencies. So working with TEMA, working with all the agencies, whether you have to get a permit from different developments or different agencies, that's reaching out to other departments in your community as well, just making sure that everyone understands what is the community's role and responsibility for being an NFIP program. And the big one is just apply your regulations consistently. You want to make sure that everyone is treated the same, no preferential treatment to any particular development or property owner. Everyone is treated the same. Those are the requirements. This is the basis for the community to remain in compliance with the NFIP program. All right, so let's get into substantial damage provision. You guys all have this provision in your floodplain ordinance. What it is basically when it comes to substantial damage, the big 4 takeaways to simplify it is the opportunity to break the cycle of disaster damage, reconstruction, repeated damages. So When the program was created back in 1968, you had a lot of structures that were built before the community joined NFIP program. That's why you call them pre-firm structures. They were built before the community got the first flood insurance rate maps. So those structures were built before the community joined NFIP program. So basically, they wasn't built in compliance with the regulations we have now for your community. Then you have your post-firm. Those structures came in after the community joined NFIP program, so they're supposed to have been built in compliance. So whenever you have an event in the community, whether, like I said, raises to a presidential disaster declaration or not, you want to assess those buildings, because if it's pre-firm or post-firm, especially pre-firm structures, and they trigger substantial damage, more likely that structure is going to be required to be elevated to bring it into full compliance. Post-firm structures should have been built in compliance, but also your regulations may have changed. So maybe back in the 1980s when that structure was built, it's a post-firm structure, but let's say your freeboard has increased from the 80s when it was 1 foot to 2023 where it's 2 foot. Now that structure has to be brought into compliance because it triggered substantial damage, but it's 1 foot below your requirement for the 2 foot requirement. Reduces future costs associated with property damages. So getting those structures, if there's substantial damage, elevated, bring them to full compliance, you minimize future damages. We cannot prevent flooding in the community. We don't know when the next event's going to happen, but when an event does happen and we have evaluated that structure and determined whether it's substantial damage or not, and if it is substantial damage or not, that opportunity to have that conversation with the property owner, say, hey, this is where the water came into your house. This is how much damages you receive. Hey, your structure is substantially damaged. You need to elevate it to the BFE plus 1 foot or 2 foot or 3 foot of freeboard to minimize future damages to that particular property, as well as reducing your flood insurance costs, because now that structure is elevated. And now as we evaluate for flood insurance policies, more about your distance from your flooding source, your elevation of your home. So all these things will go into factor with your flood insurance policy. Opportunity to build back stronger. So communities that tend to have strong regulations, strong building codes, tend to recover a lot faster than communities that don't have those requirements in place. And then because you're in an NFIP program, you have to go out there and determine, is this building substantially damaged? Not because they're located in a special flood hazard area. And as part of your agreement by joining NFIP program, you say, hey, I'm gonna adopt these regulations, and part of those regulations is doing substantial damage to determine, is a structure substantially damaged or not. All right, so what is the definition of substantial damage? So damage of any origin, so that could be flood, wind, earthquake, tornado, a car crash, a gas explosion, train derailment, anything that causes damage to that any origin sustained by the structure whereby the cost of restoring it to its pre-damaged condition would equal exceed 50% of its market value of the structure before the damage occur. So let's say you have the cost of repairs divided by your pre-market value of the structure gives you a percentage. If that percentage equal exceed 50%, it's triggered substantially damaged. So think of any origin. So don't just focus on flooding. I know flooding is the biggest disaster that we tend to see in majority of our Tennessee communities, but don't forget about the other stuff that could cause damage to that structure. You still have to evaluate it to determine, is it substantial damage or not. So to simplify it, we'll show you what the 50% rule actually looks like. So this is an easy way to understand it. You have the cost of the repairs, so, and then you have your market value. When we look at market value, we're looking at the pre-market value. So what was the value of the structure before the damage occurred to it? So you determine the cost of the repairs, you divide by the pre-market value, you get that 50%. If it's equal, exceed 50% of its pre-market value, that structure will trigger substantial damage. Easy way to remember it: a home is worth $100,000 before the flood occurred. The cost, $50,000 to bring it back to its pre-damage condition. So that $50,000 is the cost of the repairs based on the assessment of the damages that occurred to that structure. Divide those numbers, 50,000 by 100,000 equals 0.50. Multiply by 100, you get a percentage equals 50%. That structure triggers substantial damage. And this is how substantial damage works in terms of just a simpler way to understand it. When you're looking at the cost of the damages, repairs divided by the pre-market value gives you that 50% rule. So when you're utilizing the tool, you're gonna see different colors in the SD tool. I'm gonna show you examples when we get into the SD tool, but this is kind of giving you the background information. So when you start practicing with the tool, you can understand how the tool gives you that determination. So 0 to 100. So where it's going to break down is in the tool. When you run your calculation and you do your assessment, 0 to 30% is going to show up as not substantial damage in the tool. It's going to show you green. So every property that you have done assessment for, if it falls between that range of 0 to 30%, is going to be not substantial damage. It's going to show up in green. Anything that falls between 40 and 49% is going to show up in yellow, meaning it's close to being substantially damaged, but it's not substantially damaged. As a best practice, I bump that range up from 40 to 60. The reason why I do that is because you may have a structure that comes in at 49.1%, one that comes in at 50.2%. Because it's so close to that 50% threshold, you want to make sure that, hey, is that building really substantially damaged or not? So you want to go back and take a second or third review of that property before you make that final determination. So the software is between 40 to 50, like 49.1. I just bumped it up to 40 to 60 as just a best practice, because anything I feel that falls between those ranges, you want to go back and take another look at it. And then anything that falls between 50 to 100% is going to be substantial damage, is going to be red. It's just going to tell you in the software, hey, those structures are substantially damaged. For me, as a best practice, if it falls between 70 to 100%, I know for a fact more likely that structure is substantially damaged. But for anything between 40 and 60, as a best practice, go back and take another look at it. The software will tell you, hey, once it hits 50%, it's going to show up in red. But like I said, you want to go back and take another look before you make that final determination and notify that property owner that that structure is substantially damaged. So you have an event in your community. So we tend to focus a lot on flooding because that's the most recurring event we have in Tennessee. So what you want to do is, if you have an event in your community, whether it's a flood or tornado or anything that happens, you want to make sure you're reviewing your floodplain regulations. So pull it off the shelves, pull off that PDF, wherever you have it located, be familiar with your regulations. Amy and I with Cheyenne have created the Tennessee Permitting Guide, which basically took your regulations and put it into a practical guide that you could utilize to do your permitting, to do your reviews, to do your EC reviews, to help you substantial damage. It's a great resource that supplements your regulations. So if you don't know where your floodplain ordinance is after this training, I would say, hey, take a look at it, go find it. If you can find, reach out to Amy and I to see if we could provide you a copy if you don't have a copy of your regulations. You want to make sure you notify property owners of the permitting and building requirements. A lot of times property owners may not know the requirements for building in a special flood hazard area. They may know, hey, I need a permit for a building, but they may not know, hey, I need a floodplain permit because my particular property, my structure is in the special flood hazard areas, and there's a different set of requirements that apply to those particular properties because you're in the NFIP program. Make sure you require permits for all development, not just for substantial damage. So even if a structure do not trigger substantial damage, but still had damages, you still need to issue a permit for the repairs that's going to be taking place because you want to document stuff. And some of you guys in your communities, you have that cumulative substantial damage, substantial improvement requirement where within a time frame, whether it's 5 years or 10 years, you're documenting damages, improvements. So once you hit that 50% threshold, whether that's year 3, year 5, or year 6, and you make that determination, then that structure, if it triggers substantial damage or substantial improvement, then that structure has to be brought up into full compliance. But that is a higher standard that not a lot of communities have it. But for the ones that do have it, you do track it over a period of time. And typically it's over 5 or 10 years. It's really dependent on that particular community. You want to make your determination. So you want to verify or look at the flood insurance rate maps to see where that structure is located. And then if you have to calculate the BFEs, make sure that the survey who's providing you that EC on the behalf of the property owner, that they use in the flood insurance study, the FIS profile, to calculate that specific BFE for that particular site. Perform your substantial damage determination, notify property owners, because one thing you want to do the determination, but the other component of it is you need to communicate the results to the property owner so that they know of the requirements. If the building is substantial damage, what are the requirements? If it's not substantial damage, what are the requirements? And then make sure you get out of the office, drive around your community, see where the repairs, the permits, the work is being done so that you know for a fact, hey, folks are following the requirements, you're seeing elevations happening, or hey, if you need to issue a stop work order because someone is doing something that's not in compliance with your floodplain regulations. So what are the responsibilities when it comes to community? So I typically break it down to 4 key components when it comes down to responsibility for a community. When it comes to doing substantial damage. One, you need to determine the cost. So what is the cost? Well, basically looking at the damage value of that particular structure, whether it's a commercial or residential building. Determine your market value. So what are you going to use for the market value? Are you going to use the adjusted tax assessed value from the county assessor's office? Are you going to use the computed cash value from the SD tool? Are you going to use a qualified estimate? Or are you going to use a professional market? Typically, a professional appraisal usually comes into place whenever a homeowner is challenging you after you have notified them that, hey, you're building substantial damage. It's like, hey, Tim, well, I have a professional market appraisal because I'm going to sell my house. Here is the appraisal, and then they want to challenge you based on the value that you put for the pre-market value. When it comes to the pre-market value, the big thing is the value of the structure only. Take away the land, take away all the accessory structures on that property. We only focus when it comes to substantial damage, just the value of the structure, nothing else. I know in real estate, it's all about location, location. For SDE, it's all about structure, structure, structure. So whenever you're looking at that determination for that pre-market value, make sure you're only focusing on just the value of the structure. Sometimes the land is worth more than the house. Other times the house is worth more than the land. But for SD's only requirement is just the value of the structure, because sometimes you put in all of it is going to throw off your determination. So make sure when you're looking at those numbers for the pre-market, you're only focusing on just the value of the structure. You make your determination, you notify property owners if they're building substantial damage or not, and what are the requirements, and make sure regardless they come in and get permits, because this is an opportunity for you to educate them about the floodplain requirements and what is required of the community to remain in compliance with the NFIP program. And my biggest thing I tell community officials all the time, elected officials and local floodplain administrators, be consistent. If you have a process in place, you have to treat everybody the same. You cannot show favoritism to one particular property owner because you like Jerry more than you like Sarah. Everyone has to be treated the same. Your process has to be consistent. If you're going to evaluate every single property in the community and you're going to use the adjusted tax assessed value for the pre-market value, use that across the board. If you're going to use the computer cash damages from the SD2, use that for every single property. You have to be consistent. So in that way, if someone's appealing your decision, you could say, hey, this is our process, and this is how we have evaluated every single property based on the procedures that we have for community. So the key thing is be consistent when it comes to NFIP program, when it comes to your regulations. So as a property owner, things that they're responsible for, one is complying with the requirements that the community is enforcing them. Make sure that they require a permit, that they fill out that permit, whether it's there or whoever's acting on their behalf. They submit all complete information, all proposed improvements and repairs that's going to take place. Be aware that sometimes property owners do that quite often. I've seen that in disasters I've worked where they submit the repairs by piece to try to avoid that substantial damage determination. So just be aware of those things as well, or they may try to do phase improvements so that they don't trigger substantial improvement or substantial damage. So just things to be aware of. So making sure that when you're assessing that initial permit, you're asking all the right questions. But once you have gone out there and make your determination, you should have all the information and kind of have an idea, okay, all the damages that occurred to the structure, all the type of repairs that's going to be necessary to bring that structure to its pre-damage condition. And make sure that they abide by the approved plans and making sure that everything is done within that time frame of that permit, whether that's 6 months, 180 days, or if they need an extension, just making sure that you have documented everything, you have a case file. And the good thing about the SD tool, you could always go back and make modifications to the assessment. So the assessment that you do today may not be the final assessment because you may go back and look at that property, or the property owner brings you a contractor estimate, say, hey, I've hired a contractor to do all the repairs. This is the dollar value for the contractor estimate, or oh, hey, I have a professional market appraisal that I want to add into the assessment files. So you could always go back and modify the assessment. That's the beauty of the SD tool. You could always go back and make changes. So this is kind of the process for substantial damage. One, you assess the damage, make your substantial damage determination, notify property owners of the requirements. Hey, you're less than substantial damage. This is what you need to do. Use flood resistant materials below the base flood elevation. Elevate floodproof utilities at above the BFE. If it is substantially damaged, hey, use flood resistant materials below the BFE, elevate utilities at above, and you may have to elevate the lowest floor at above the base flood elevation. So depending on where that structure falls with that 50% rule, they're gonna need a permit, and they're also gonna need different requirements if that structure is substantial damage or not. So when you're getting out there to go assess those buildings, so in the past, when my teams and I have gone out and support substantial damage with disasters in communities, I tell local officials, have you go back, have your tape measure to measure the watermark for that particular structure, so you know how much water came into that particular structure, where the ground is, where the lowest floor is. Have your cameras or cell phones. You want to take pictures because the SD tool is going to ask you for a minimum of 2 photos. You're going to need the photos in order to generate the assessment, because the tool's going to give you a printout of that particular assessment for that property, but you're going to need the photos. So take at least 2 photos. You could take as many photos as you want, whether you have a digital camera or you have a smartphone, whatever you want to utilize. Make sure that you're taking photos of that particular structure as best as you can. Portable GPS nowadays, phones, they kind of have GPS on them, but if you have a portable GPS to get a specific latitude and longitude, because you're gonna need that for the property as well, especially if you're trying to geo tag the properties in GIS, ArcGIS. The clipboards are handy, so that way you could kind of write down, especially when you're working in subdivisions where a lot of the homes may look alike. You want to make sure that you could identify, hey, this particular picture goes for this particular house, or having, or if you have different teams, to fill out the clipboards and say, hey, team 1 did this particular street, team 2 did this particular street. And then if you have tablets, so whatever resources that you want to utilize in your go bag, those are some of the recommendations that I've recommended for local officials when you start doing substantial damage. Review your property access protocols. So are you going to go into the property or not? Make sure you review those stuff with your attorney's office, just to make sure you have your protocols in order. Every community is different, so typically, whenever I've supported local officials, we have just kind of gone to the property, kind of walk around the property, get a good feel of it. Rarely ever go into the house, but if you can go into the house, but your best guess is just trying to come up with a reasonable estimation based on what your visual is seeing from the outside and taking a look at the property. So, but if you go in there, like I said, just make sure you have your protocol, because every community has different protocols for entering properties or not. Review your safety procedures. I'm big on safety. So if you don't feel safe, or area looks kind of sketchy, or you need police or sheriff presence with you to go out to those areas that's just not safe, make sure that you review your safety procedures. Make sure you notify police and sheriff of your daily schedule. In the past, we've had the police called us when we had supported local officials because they didn't notify, hey, FEMA is going to be assisting the community. We're going to be out and about, so make sure you notify the sheriffs in advance. So that way, when folks are out walking about, whether it's the contractors you hired for the city or it's your own city officials, just making sure that you have that communication with your police department. Perform your substantial damage inspections and record your data. So permits are required post-event. So a permit is required regardless of whether or not the repairs rise to the level of substantial damage. So I always going to stress that you're going to need permits regardless of if the structure is substantial damage. You cannot waive the permit requirement. You could waive the permit fees if you don't want to charge an applicant after an event for permit costs, but you cannot waive them not getting a permit. You have to document that they came in, you looked at the work that's going to be done, you issue them a permit, you have filed it in that, whether it's an online system or paper system, whatever system you have for your community, you have to make sure that you're requiring permits. And like I said, if you have non-compliance, it's going to impact the flood insurance. And also it could have ramifications for the community, where the community could be put on probation or suspension because they are not enforcing their regulations. So post-disaster permits, so just assume those are just some things to be aware of. Structure owners may not know the requirements. They may disregard the need for permits. They're going to be anxious to start the repairs. Typically, especially after flooding events, they want to get into the house as soon as possible. So I typically say, as long as it's safe for you to get out there and assess those buildings, you want to get out there as soon as possible, because the homeowner is not going to wait on you to come out there and assess that building. They're going to try to get back into the house because they have to get back to work. The kids have to go back to school. They need to be back into the house as quick as possible. So the quicker you get out there and assess those buildings and make that determination is going to speed up the recovery process. You may feel the pressure from local officials and owners to start the repairs quickly. Say, hey, let's get people back into the house. You cannot do that. You got to understand that, hey, you want to make sure that you review those properties to determine is it substantial damage or not. Because one thing you hate is somebody to do all these repairs and then you come back and say, hey, by the way, I know you spent all this money to repair this house, but this house triggered substantial damage and needs to be elevated. And because the property owner spent all the money, say, hey, Joe, I don't have any funds left because I already did all the repairs. So that's why I say it's so important to get out there as soon as possible. And the big thing, you want to make sure that you're keeping your community in compliance with the NFIP program. So in that way, you don't jeopardize flood insurance, disaster assistance, federally backed mortgages, grants, and assistance. Because your community got kicked out of the NFIP program, you want to make sure you remain in compliance. So make your determination. So it's a local responsibility. Like I said, professional market appraisal is always going to be your best option. That one tends to come into place whenever there's an appeal from a property owner. The tax assessed value I put adjusted because you may have to go to your county's office and try to determine how often are they assessing these buildings. Is it every couple of years, every 3-5 years, annually, on if you need to raise it to its full market value because they may not be assessing it as full market value, so you may have to use adjustment factor in the SD tool. Computer cash value, including the depreciation. So what the tool does is that it's going to calculate your cash value based on the price per square feet, the square footage of the building, and it's going to ask you how was that building maintained? Was it in good condition? Was it falling apart? Did it need serious repairs? And then the fourth option is the qualified estimate based on the professional judgment local official. I tend to tell folks to kind of stay away from the third option because then it kind of gets a little kind of subjective. So you tend to want to focus more on the appraisal, adjusted tax assessed value, or the computer cash value. And then this right here, just a list of things to include in the repair costs. You got materials, labor, site preparation, demolition, construction, things to exclude, cleanup, trash, land survey costs, permit fees, inspection, and any outside improvements. Because remember, you're only focusing on just the structure itself, not anything else that's happening that's on the exterior of the house, like landscaping, sheds, and driveways and stuff. You only focus on just the structure. All right, the SD tool. So the SD tool, this is the latest version. It's been out, I think, came out in 2017, 2018 timeframe, if I'm correct. I think it was at that time frame. It was developed by FEMA to assist state and local officials in estimate substantial damage to residential, non-residential structures. The SD tool allow community officials with limited appraisal or construction backgrounds to develop reasonable estimates of structure values and structure-specific damages in accordance with NFIP requirements. And you could use it in conjunction with industry accepted residential cost estimated guide. So the tool is an estimation, substantial damage estimator, to come up with a reasonable estimation based on what you have seen with the damage to that structure, determine is it substantially damaged or not. You're not required to use the SD tool. This is just a resource that FEMA has created for local officials. If you have your own process, utilize your own process, but this is just a standard process that FEMA has created to help officials. You may not have an appraisal background, you may not have a construction background, but you need to come up with a reasonable estimate. And that's the intention of the tool, is to help officials to make those determinations. And they have a consistent method, a consistent process to evaluate structures, especially when there's a disaster declaration or there's a non-disaster declaration. Utilize the tool, have a process in place where you're consistent across the board for your community. So same we talked about, is the structure substantial damage or not, notify the property owners, yes and no, and what are the requirements. And then what are the implications? So reduce the flood risk, compliance with your local codes. It fulfills one of the prerequisites for ICC, that's your increased cost of compliance. So in your flood insurance policy, you have what we call ICC, which basically means that once the community has determined that your structure is substantially damaged, now you have up to $30,000 in your NFIP policy to do mitigation measures like Fred. You could dry flood proof it if it's a non-residential building. You could elevate it, you could demolish it, or you could move it to higher ground as part of the ICC eligibility. But in order for a homeowner or business to qualify for the ICC within their flood insurance policy, that structure has to be determined substantially damaged from the community. And you could also use it as part of the cost benefit for HMGP grants, or if you're doing an elevation, you could use it as part of the match for that grant. And in the long term, reduces flood insurance premiums for that property owner, because that structure has been elevated. It's high elevated, the utilities are elevated, you have flood openings, which give you a discount on the risk rating 2.0. Non-compliance jeopardize the community participation in NFIP program, because if you have, when we come out there and audit your program, when we see a series of non-compliance, you did not go out and assess those buildings, that could potentially put the community in probation and eventually suspend it from the NFIP program. Insurance premiums could go up, damage costs, because now that structure has been repaired, but it's non-compliant. Another event happened to it, boom, they got to go back and do the same thing. So now you have double the cost, because the first time that structure should have been brought into full compliance. And then this is the ICC as referring to as part of your insurance. And a lot of property owners are unaware of that. But the biggest thing in order to utilize up to that $30,000 is the community has to determine that structure substantial damage and has to be related to just flooding. So the other component of ICC is that you need a substantial damage determination, but also the damages has to be from flooding. So even though you do SD for any type of event, for the ICC with the flood insurance policy, it only has to be from flood related damages that the community has made that determination. So remember, Fred, you could elevate, dry flood proof, non-residential, demolish and rebuild the house, or you can move it to higher ground. And then this one is just talking about the cumulative improvement. Like I mentioned, some communities in Tennessee have this. Not everyone has this, but this is kind of just showing you how the substantial improvements works over time, where year one, there's a value, the cost of improvements, year three, what's the market value, what is cost of improvement. So by year six, it hits that 50% for substantial improvement. Now that structure has to brought up to full compliance. So this kind of just showing you if you have that requirement in your floodplain ordinance. All right, here's my contact information. This is the first slide. I just want to kind of set us up. The next presentation is just kind of show you the different components of the SD tool. And so now where you understand how the assessments work with residential versus non-residential. So let me close this one out. Give me 1 second, everybody, and bring up the other PowerPoint. All right, cool. Everyone still seeing my screen? Give me a thumbs up. I didn't lose anybody. All right, cool.
It's still there, thanks.
Awesome. All right, so the first PowerPoint kind of set us up to understand how substantial damage works. Now, this PowerPoint is looking at going into the SD tool, because in order for you to utilize the SD tool, you have to understand the different elements that you're going to be assessing for the cost of the damages. So for residential property, when you're going out there and you're assessing that structure to determine is it substantial damage or not, you're going to be looking at 12 elements: foundation, superstructure, the roof covering, exterior, interior, doors and windows, cabinets and countertops, the floor finish, plumbing, electrical appliances, and HVAC. There's 12 components that you have to assess, and you have to figure out a percentage damage. So when you get into the tool's going to ask you from 0 to 100, what is the percentage damage for that particular element of that residential building? So it could be, you could say, hey, the foundation got 5%, the foundation got 25%, or it got 100% damage. You're going to have to come up with a percentage from 0 to 100. As a best practice, I recommend use increments of 5, 10, 15, 20, because it's going to be easier and also more easier to explain. Because if I come out there and ask you, how do you come up with 0.2%? It's going to be kind of hard to explain a 0.2%. So remember, this is just an estimation. You're trying to come up with a reasonable estimation based on what you're seeing for those particular elements. So use increments of 5, 10, 15, between 0 to 100. So from residential, remember residential, you're going to be looking at 12 elements versus non-residential, where it's only looking at 7 elements. So for non-residential, you still have foundation, but you have the superstructure, and within the superstructure, they have like exterior finish, interior finish. You have your roof covering, plumbing, electrical, interiors, and HVAC. Correction, for the doors and windows, it will fall under interior for non-residential buildings. But those are just the different elements that you're going to be assessing for when it comes to residential versus non-residential. The way the tool works is 2 parts to the SD tool. One, you have your property information, and then the second part of it is you have your assessment. Your assessment is where you go out there and you evaluating those 12 elements for residential versus the 7 for non-residential. And this is where you're going to come up with your percentage from 0 to 100 for those various elements. And this is how the software is going to calculate the SDE determination for you. So let's just go over the foundation types. So what you're going to see is the software is going to ask you, you have options to pick from 6 different foundation types. You have your continuous wall with slab, which is going to be kind of your standard. You have your basement. If the structure has a basement, what is a basement? So that way you kind of understand what are the basement when you're looking at, hey, you said, hey, this structure has a basement. This is a definition of a basement. If it's a slab on grade, which is the lowest floor of this house, is formed by a concrete slab that sits directly on the ground. You might have pilings that goes into the ground, whether it's timber or precast concrete pilings. Then you may have a crawl space, and then you may have piers and posts. So it just depends on when you go out there and looking at that foundation type, you have to pick one for the SD tool. So this is just showing you different pictures. So you have your continuous wall with slab. What does that look like? What does a basement look like? You have your slab on grade in the upper left-hand corner. You have your piers and posts. You have your crawl space with your flood openings. So remember your flood openings to allow for the automatic entry and exit of flood waters no more than 12 inches above your grade, whether that's interior, exterior grade, whichever one is the highest, no more than 12 inches to allow for the water to go in and to come out with no human intervention. So that's why you have your crawl space with your flood openings. And then you have your pilings where you have that structure. And you typically see a lot of that along our coastal areas and riverine areas where you have those homes elevated on the pilings and stuff, and then your piers and posts. So those are just the different foundation types that you have to select for residential properties. Then you have your superstructure, which includes all the framing that provides structural support and the load pad between the foundation and the roof. So typically most homes are built nowadays as start frame. So that's going to be your kind of your standard. Then you have your common brick. So the house my wife and I had in Philly was all brick because the house was built in 1914. So if I was assessing our house for substantial damage, I would click for the superstructure brick because the whole house is built in brick. You may have insulating concrete foam. Nowadays, new homes, as part of the insulation to reduce energy efficient, they may have insulating concrete foam. And then you may have masonry, which you have a lot of those homes in the south, like Florida, because they get a lot of hurricanes. So after Hurricane Andrew came through in the 90s, they kind of changed the building codes, requiring most homes to be built full concrete and rebar. So depending on that structure, you have to select a superstructure from it based on what you're seeing for that particular structure. And this kind of showing you what the start frame superstructure looks like with your 2x4s with your siding. Then you have your common brick with your framing and your bricks. Then you have insulating ICF, insulating concrete foam, and then you have your masonry. So it just depends on what for the superstructure for that particular structure. And this is just showing you different images, what the start frame looks like versus a common brick versus insulating concrete foam versus masonry. So if those homes are newly built in your community, you should have all that information. It's going to be a little bit harder for older homes. So that's why you kind of have to do some research as well too. But if you know most of the homes during that time frame were built a certain type of way, more likely that structure is going to fall within one of those 4 options based on the time that was built. So this is where knowing your community history and kind of have to sometimes do some research, look into the case file, look into the permitting file to kind of get those information as well. Then you have your different roof coverings. So it could be shingles, asphalt, wood, or fiberglass, your clay tile, standing metal, your metal roof, or have a slate roof. So just depending on what's the roof covering, you have to select one. And it's showing you different examples of an asphalt, clay tile roof, a metal roof, and a slate roof. Don't really see too many slate roofs. I know Philly had a lot of slate roofs because you had a lot of homes that were built in the early 1900s, and a lot of them had a good family friend who had a slate roof as well. So it's not too common where you see that. But majority of homes gonna have either shingles or metal roof. Clay tile is more of a Mediterranean, South Florida type of things because the house I grew up in Florida had a clay tile roof because that was just the designs of those homes in South Florida. And then you have your exterior finishing types. So your exterior finishing types just adds to the weatherproofing aesthetics of that house. So non-structural, therefore not required if the wall materials provide sufficient weather protection. So like, for example, some older homes may have structural walls composed of brick that serve both as a structural support system and exterior finish. Like the house we had in Philly, the bricks function both as a superstructure and the exterior finish. So typically you're gonna have your siding or stucco for your exterior finish, or non-common brick, both functioning as structural as well as the exterior finish. Or you may have brick veneer, where you have some homes where they apply the brick veneer with new construction, or you may have exterior insulated finishing system, IFSS, as well. So it really just depends on when you evaluate that structure, what do they have for exterior finish. And then what does it look like, brick veneer versus exterior insulated finishing system. Then we get into the interior finish. So those are the things that you're gonna be looking at: gypsum board, drywall, paneling, trim around the doors and window frames, a baseboard casing, chair rails, ceiling moldings, your doors and windows, all your interior and exterior doors and windows, locks, hinges, frames, handles. Those are all the things that falls on the doors and windows. And then your cabinets and countertops, your built-in, wall-mounted, isolated cabinets, countertops, kitchens. Remember both your kitchens and your bathrooms. Your floor finish, carpet, hardwood, vinyl, tile, marble. Those are the things that you look for your floor finish. And then then you have your plumbing, so all your incoming water service, plumbing fixtures, water heater, water distribution system, wastewater collection and removal system, your electrical, so everything that involves with the electrical, all your junction box, circuit breakers, panel boxes, outlets, wirings, your lighting, ceiling fans, exhaust fans, electric baseboard heaters. So those are all the things that you have to consider when you're looking at the electrical to come up with a percentage that's damaged. Then you have your appliances. So the big one for appliances, you're looking at all your built-in permanent appliances in the structure. So you're built into the kitchen cabinetry or the walls. For SD, we kind of exclude your freestanding appliances since they're not directly associated with the building. That's always one that kind of gets a little bit difficult for commuters and local officials because homeowners always ask, "Hey, what were my appliances?" For SD compliance and SD, the guide, it just says that we only looking at just your built-in appliances that's built into the cabinetry or the walls. If it's freestanding, it's not going to be factored into it. It's excluded. And then your HVAC unit. So anything that's associated with HVAC. So the structure may only have cooling or may have heating or both. Then you look at your heat pumps, your furnaces, and all those things that goes into it. So, and then HVAC. So kind of explain the HVAC system. Kind of understand that some parts may have heating or not heating. Some may have cooling or not. May have both. So just kind of understanding what that particular structure has. And then we get into your non-residential. So non-residential, you're looking at foundations, but you're looking at your perimeter footings, piers, all foundation elements. Your superstructure, now it includes your foundation from foundation to the roof, structural members, roof deck, roof rafters, trusses, exterior finishes such as exterior walls, siding, and exterior doors. For superstructure, it adds the exterior finish into it versus residential, where the exterior finish is separate from the superstructure. So that's just something to be aware of. And don't worry, guys, I'm gonna send you guys a copy of this PowerPoint presentation. So don't worry about trying to write down everything. You will get a copy of this PowerPoint presentation. So I should have said that in the beginning, so my apologies. But yeah, you will get a copy of all this stuff. All the things I'm gonna show you guys today, you will get a copy of it at the end of the training today. All right, roof covering, so your roof materials, shingles, roof sheeting, roof flashing, all your plumbing from incoming, and then residential, you may have fire protection with your sprinkler systems in there as well. So just be aware of that as well too. And then electrical may get a little bit more complicated because you may have communication systems in there. You may have conveyance with an escalator or elevator, security systems. All these things fall under your electrical and they may be damaged as well. So you have to take that in consideration when you're making your assessment. And then your interior, of your partition doors, interior doors, and your wall, floor, ceiling, all those finishes has to be factored into your interior for non-residential. And then HVAC, heating units, cooling units, ventilation. And for the big thing for non-residential buildings to remember when it comes to the assessment is that for non-residential structures, construction type is not used directly as the basis for determining the element percentage. So what that means is that when we get into the SD tool, you're gonna see kind of columns under the cost. You're gonna have like the percentage from 0 to 100 for the cost of the damages. then you're gonna have an element array. So basically, once the software has calculated a value for that structure, it's gonna give a dollar for each of those elements. So for residential, it's gonna say, hey, if the house is valued at $100,000, the foundation makes up $10,000, or the superstructure makes up $8,000. It's going to give you a breakdown, and that breakdown, that dollar value, is what you're going to be able to calculate the cost of the damages once you do the percentage from 0 to 100. When I show it to you, it will make more sense, but this is what this is referring to when it says the element percentage array. So for non-residential buildings, structures use and the number of stories is the big factor for the element array. So basically, what is the structure used for? Is it a grocery store? Is it a police station? Is it a courthouse? Is it an apartment building? And then how many stories does it have? 1, 2, or 4 more stories? All this stuff is going to play a role when it comes to the breakdown of the dollar value when you're assessing that structure. So just something to be aware of, where it's a little bit different from non-residential versus residential properties for assessment. So this kind of tells you all the different structure use that you could select in the SD tool. So you could have apartments, auditorium, commercial retail, convenience store, department store, mini warehouse, a motel, police station, strip mall, and then going to ask you, okay, is it a 1-story, 2 or more, 2 to 4, or 5 or more? So all this stuff is going to play a role when it comes to non-residential buildings versus residential buildings. All right. Now we're gonna get into the tool. Does anyone have any questions before I go into the tool? I'm gonna bring up another screen. Anybody have any questions? Okay, hearing none. All right, everyone still seeing my screen? You guys should be seeing the SD Estimator 3.0. Is everyone seeing that? Give me a thumbs up, say hello, hi, I'm still here, Julius. All right, Peggy's still seeing it, so I'm gonna take Peggy word for it. So awesome. Thank you guys. All right. So SD tool 3.0. So this is what you really came for, to see how the SD tool actually works. So everything I've talked about in the first presentation on the overview of SDE and substantial damage, going over the different elements for residential, non-residential, all feeds into understand how the SD tool. So I can't do this without showing you guys how everything works together. So now that we're in the SD tool, this is what the tool looks like. So this is a software. You go on Google search, type in FEMA SD Tool 3.0 and be able to download it. It is a standalone software, so once you download it, it's going to be on your computer. And then if FEMA does have an upgrade, we will let you guys know. Basically, you have to uninstall and install the new version. But any data that you have in there, you could export and import it into the newest version. All right, so this is the tool. So this is your dashboard. So once you download the tool and you have it installed and you open it up, it's going to open up into this beautiful page for you. You can name your database. So at the top where it says database name, you can name it whatever you want to name it. You don't have to name it. It's really up to you. It's your own database. It's a standalone database. So you're going to have your access your data. So this is where you see that little magnifying glass. This is where you search and view all records. So if I click on this option, it's going to pull up all the records that I have in the system. So as you notice, for today's demonstration, I already have 3 properties in the tool for you guys to look at. So remember in the beginning when I talked about yellow, green, and red? So whenever you complete an assessment, this is what you want to get to. You want to get to that point where you could see all the property that falls into the green category, not substantial damage, the ones that fall into the red category, substantially damaged, and the one that falls in yellow, not substantial damage. But you see when I said 49.3% is close to that 50, where you want to go back and take another look at it. So all those property that falls between 40 to 49.9 is going to fall into that yellow category. If it's above 50, it's automatically going to show up in red. But you remember, as I said, as a best practice, anything that falls between 40 and 60, you want to go back and take another look at it just to make sure that, hey, is that building really substantially damaged or not? Because you could always go back and modify the cost of the damages based on if you have better information, or you say, hey, you know what? The electrical only had about 20% versus 30% when I originally assessed it. You could go back and make those changes. So when you click on view and search all records, if you want to look at both the structure type residential, non-residential, or residential by itself, you could do that. So if I click on residential and I hit filter, it would go blank. The reason why I went blank because all the properties I have done for the demonstration are all non-residential. So if I click on non-residential and I hit the filter option, then all the non-residential properties will come up. If I click on both, they're both residential and non-residential will come up. Now, if you're looking for an assessment date for a particular time, so the assessment date is when you went out there and assessed the building. Let's say if you did the assessment today, you could do a search for everything between today and tomorrow. You could do a custom field. If you had anything in the custom fields to search for it, you could search by value, structure type, NFIP ID, film panel, view all record. You could search for only properties without assessment. So if you click on that little box right here, it says only view the properties without assessments. If I hit filter, it will bring up every single property that's in the tool that hasn't been completed an assessment. So if you see at the bottom of my screen, it says a total number of properties. I have 13 properties, but I only have 3 assessment. So I have 10 properties that I haven't completed assessments for. So if I want to see all the properties I haven't done assessment for, I have to click that little box here and it's going to bring up all the properties. So you see all those properties are in here because I put those properties in here. So now you could see if I click on this 145 JFK, it's going to come up structure owner Roger Lindsay, an address, CID, community name, but there's no assessment date, there's no inspector, there's no percentage damage. So at that point, I could either edit this property information or I could delete it. But I cannot do anything because there's no assessment down here. So these options are going to be blacked out for you because you haven't done an assessment. All right, so I'm gonna close this out. I'm gonna uncheck the box. I'm gonna hit filter again, and it's gonna bring out all my properties that I have assessments for. Let's go back to main menu. So at the top, you have the same options. So main menu takes you back to your main page. Bulk editor. So bulk editor is basically if you want to go in there and edit all your records at the same time. So let's say if we work in the city of Nashville and we have spelled Nashville incorrectly for every single property, we need to go back and edit it all at once. You could go in bulk editor and go back in here and edit the field. So every field that's in here is fields you could go back and edit, but you could do it all at once instead of individually open up every property information. Bulk editor allows you to go in there and make changes all at once to multiple properties. All right, go back to main menu. If you do enter default data, so you know you're working in your specific community and you're looking at all those properties and you don't want to keep on typing the same information over and over, the city, the state, county, zip code, year of construction data, base cost information, the inspector information, the community information. If you have any specific notes about that community, you could go into default data and basically fill out this entire thing as much as information as you want, and then you hit check spelling. I'm always going to, as a best practice, always remember hit check spelling. This is going to be your best friend because this software is going to check your spelling. So if you know you're not a great speller, I know nowadays with technology and autocorrect, it's always correcting our phones, our iPads. Basically, the software has a built-in autocorrect. Once you hit check spelling, if something's spelled incorrectly, the software's going to say, hey, you need to go back and fix it. Because once you have generated this report, however you type it in is how it's going to show up. So that's why I said always hit check spelling on all your records just to make sure that things are spelled correctly. So if you know something is spelled correctly, but maybe the software just doesn't understand it, maybe it's you have a community name that's just not in the dictionary correctly, put the software and you know it's correctly, then just overrule it. But check your spellings is just always a good practice with the SD tool. You can clear all your values, hit delete, and hit save. Once you hit save, it will save this default data, so that way you don't have to keep typing in the same information over and over again. I'm gonna go back to main menu. So now you have add a new property. So you have with the software, you have two options to add new properties into the tool. You could individually add a property or you could do it via the Excel spreadsheet. I'm gonna show you how to do the Excel spreadsheet. So basically with the Excel spreadsheet, if you know you have like 200 homes in a special flood hazard area, you could create an Excel spreadsheet with all those property information and upload it into the tool. So in that way, you don't have to individually go in there and add one property at a time. It speeds up the process. because as I mentioned, there's two parts to the software. One is the property details. That's the property information like owners, last name, street number, street name, street suffix, city, state, county, zip code, your parcel number, lot number, year of construction, latitude and longitude, because you're going to need to make sure you're in the right place. So if you say the community is in Waverly, then the latitude and longitude should be reflective of Waverly, Tennessee. What is the structure type? Residential, non-residential. What's your NFIP information? Community name, CID, firm panel, firm zone, data firm panel, suffix, base flood elevation, regulatory floodway. And if you have any particular custom fields, you could add it in there as well. And then you see at the top where it says load default values. So instead of you having to type in all the same information all the time, if we had populated load the default values, it would automatically populate those fields for you. So that way you don't have to type in the same information. So load default value comes in handy when you individually added one property at a time. But doing that way is very time consuming. Best practice, I'm going to show you how to upload via the Excel spreadsheet, and I'm going to give you the SOP on how to populate the Excel spreadsheet into the tool. So that way, after this training, it's like, hey, I'm going to do the Excel spreadsheet because the one-on-one property is going to take a very long time. You will have the SOP on how to do that as well too. So hit your check spelling, hit save. You have your property information in there. So I'm just going to do one. So I'm going to type in Peggy. I'm going to put in last name Curtis. I'm a street number. I'm going to say 7895. Street name, let's say Howard. I'm going to find my street suffix. I'm going to say Avenue, city. I'm going to say Nashville. I'm going to say state. Let's scroll down, find our state of Tennessee. We have Tennessee. We're going to find the county. So we're going to find, all right, what? Nashville is in what county, everybody? Anybody know Nashville?
Davidson.
Davidson. All right, cool. Thank you, Emin. Always coming in the clutch. All right, so I'm going to find down and find Davidson. So once you type in the state, all the counties should come up. So we have Davidson, and I'm just going to create a zip code. It's not correct. I'm just making up a zip code. Okay, you could put in all the rest of the numbers or just the first 5. Parcel number from the property information, I'm going to say 5897. Lot number, leave it blank. Year of construction, I'll say 2008. Latitude and longitude. All right, I'm just make up something. Amy, what's the lot? Give me a latitude and longitude number.
What, 86.02345?
All right, cool. It's gonna make up. I'm gonna make
and
up.
then,
All right.
Yeah.
258. All right. Longitude is gonna show up. Let's say it's
75.12345. I'm just making something up.
Well, that's just gonna be negative. So I think that may not be in Tennessee, but we just run
Right.
with it.
Yeah.
All right. So once select residential, non-residential, I'm gonna say residential. CID community name. I'm gonna say Nashville. CID number. What's the CID for Nashville? Anybody know CID for Nashville?
37214.
7. Is it 37?
Oh no, I'm sorry. It's 470040.
Okay, we have a phone panel. I'm just gonna make up phone panel number, everybody. This is just making stuff up. Phone zone, say AE, data phone panel. To the drop down, I'm just gonna type in something. I'm gonna say phone panel 08 15 20 2006. Suffix from the D base flood elevation. I'm just gonna put it based on 5s. I'm just making up some numbers, everybody. Regulatory floodway, I'm gonna say yes, and then if I have any custom fields, I could add it in here. So what I'm gonna do, I'm gonna hit check my spelling. Remember I said check spelling is gonna be your best friend. Click on check spelling, spell check is complete. Then I'm gonna hit save. Spell check is gonna do it again for you. It says it suggested that you complete all information as marked with a push pin. So basically what it tells you is that, so this has been saved, but you know it's a push pin. So the software is gonna come up with push pins. You're gonna get green, yellow, and red. Red push pin means you will not be able to save that assessment or that property information because something is not correct. Yellow push pin says, hey, go back, take a look at it. Green push pin is like, hey, I'm gonna let you do it. I'm gonna let you save it, but you honestly need to go back and fix something. So red is always bad. Yellow is cautionary. Green means you're allowed to save it, but still go back and check it. So now once I've hit it, so now you see my number of properties have changed from 13 to now 14 properties. So every time you add in a property, your total number of properties is gonna change. So the bottom is how many properties that we have in the software. The total number of assessments is how many assessments we have completed. So now, because this is saved, I'm gonna go back to main menu. So now, remember when we had to select what type of structure is it? Is it residential, non-residential? So now you're gonna go to the second part of the tool now, which asks you for, hey, do you want to do residential assessment or non-residential assessment? So now I'm gonna click on add new residential assessment. So every property that's a residential property is going to show up for residential assessment. So if you click on new residential assessment, but you're looking for a non-residential property, it will not be in that category for you. So remember, residential assessment goes with residential properties. Non-residential assessments goes with non-residential properties. So every property that's in there from Roger, Sydney, Roger again, Sam, Sydney, and Peggy are all residential properties. So those are all the properties that I have either put in via Excel spreadsheet or the one I just put in with Peggy that was just an individual property that I just completed. So if I click on a property, I'm gonna use the selected property to then do the assessment. I'm gonna get back to it in 1 second. If you click on add new non-residential assessment, every property that's in the tool from Julia, Sam, Jake, Amy, Cheyenne, Jake, Amy, and Cheyenne again are all gonna be non-residential properties. So non-residential properties are only gonna show up in non-residential assessment. Same thing, click on Amy's property, 210 JFK Boulevard, click on use selected property, or if I want to add a new property, I could add it in there as well, but you want to select selected property to take you to the next part of the tool. All right, so user manual. So the tool has a built-in user manual. As you go out throughout the tool, there's going to be built-in question marks. So after this training, you start practicing the tool, start utilizing for events in your community, and you have a specific question, you have a built-in manual that's built into the tool. So I said tool came out 2017. You have built-in question marks throughout the tool. So if you click on this question mark, it will take you directly into the manual to find that specific question that you need an answer for. So that's a good thing about the tool, is that that's a helpful aspect that the previous version 2.2 did not have. All right, web references. If you click on web references, it's just going to take you to the FEMA's page. So if your computer, laptop's connected to the internet, it's just automatically going to take you into the FEMA's website. So if you want to look up, so I look up SISD desk reference, and then do a search, it will come up with anything that relates to substantial damage. You kind of find stuff in here. So if your computer is hooked up to the internet, the web reference is going to take you to web references. Your save enterprise import mapping. So basically, whenever you upload an Excel file, the software is going to ask you, hey, Amy, do you want to keep on doing the same requirements every single time, or do you want to save your map settings? So in that way, you don't have to, every time you upload an Excel file, you have to go back and individually fill out this enterprise mapping function, or utilize the one that's currently saved in the tool. So once we do it with the Excel spreadsheet, we're going to save our map function. So that way, every Excel spreadsheet, we don't have to go back and have to map the data into the tool. We just click on it and the software will upload it based on what we have for our mapping enterprise settings. Go back to main menu. Import export functions. So if you need to import SD data into the tool, so let's say if Amy is working on SD materials, I'm working on SD materials, and she wants me to review it, I'm basically gonna put it on a jump drive, and basically I'm gonna click on import SD data, find that data and upload it into a tool. If I need to export out the data, I click on export SD data. Enterprise import is where you go to bring in the Excel file into the tool. You could export files to Excel file, import user settings. Then you have your reports. So basically, you could look at 3 different reports. You have a community report, structure and percentage damage, and you have your summary report. So if I click on community report, it's going to open up. And right now it says I could filter by both types. If I want to filter by residential, non-residential, so I'm going to click on just non-residential. I'm not going, if we want to be specific and go by inspection date or display reports without photos, I could click on that. But I'm just going to click on filter, and it's going to bring me up a report, a community report. So if, let's say, Amy calls Tom and say, hey, Tom, I want to see all your SD community report, Tom could generate this file for Amy and submit that to Amy as one, as he could print it out, save it as a PDF, export it as an Excel, PDF, or Word document, and basically going to give you a report for all your properties that's in the community. You're going to have the owner's name, the base for the value, so the pre-market value, the cost of the repairs, computed cash value, type of structure, percentage damage, blah, blah, blah. And so you're going to have that. So that's the community report. Go back to main menu. I'm going to click on view reports. I'm going to click on structure, percentage, and damage report. So this one's going to non-residential. So this is kind of going to show you like a different aspect of it. So you have your structure and then your percentage damage report. So depending on what type of report you're looking for, you could get it from the tool. So it just depends on what report you're looking at. And then you see it gives you the timestamp at the bottom when you generate the report. So go back to main menu. I'm gonna click on view reports. I'm gonna click on summary report. And if I click on summary report, this is kind of giving you a little bit more details for each of the individual properties. So the summary report is going to tell you, okay, for this particular property, for Julius Lockhart, 124 Main Boulevard, Philadelphia, Tennessee, you're going to have the owner's name, you're going to have the subdivision information, community information, NFIP information, year of construction. I have my photo of my grocery store. Then I have my damage information. So basically telling me, hey, the date of the damage assessment. So this was July 8th for 2022. What caused the date of the damage was a 7th. What caused the damage was a fire. Amy did the inspection. Amy's phone number. If it was a flood, the flood information would be here, but because it's a damage, it was by fire, only the fire fill is going to be filled out. Then you have your NFIP information, firm panel suffix, data firm panel, firm zone, BFE, regulatory floodway, percentage damage. So what did we use for the percentage damage for the pre-market value? We use a professional market appraisal. Percentage damage, not substantial damage at 19.1%. And what did we use for the basis for the cost of repairs? We use a contractor estimate that was at $65,000. And then you have your damage summary. So this is kind of telling you, okay, what would be the replacement cost, your depreciation percentage, computed cash value when you factor in the depreciation of 19.9%, which the software is going to give that to you once you select, hey, this house or grocery store needed extensive repairs or was newly built. It's going to ask you all those questions that you're going to have to answer. Then it's going to give you the computer damages. The computer damages based on the percentages that you selected for those 7 elements for non-residential building. And then scroll down, and then all the optional information. So like professional market appraisal, that's an optional data information. The adjusted tax assessed value, that's optional as well. The contractor estimate is optional, or the community estimate. So if the community came up with its own cost of the damages, you could put that in there as well too. Then you have your signature for you as local floodplain administrator, your name, and then you have the date of the report. So Tuesday, March 21st, 2023. So every single property that has a complete assessment, you could generate the report in here. So you could go in here and look for all your properties that has completed assessments. So which is a really good thing about the tool. It does all the legwork for you. Once you plug in all the information, it prints out and generates all these reports for you. So you don't have to type up a report to notify property owner, notify elected officials, or notify FEMA, the state. Everything will be in the tool for you. So it's a one-shop all for substantial damage. All right. So then you have geo files. So if you want to generate a geo file based on your latitude and longitude, you could do that as well too. There's a process for that one. I haven't utilized it in my experience because I never had to generate a geo file. But if you have ArcGIS, you could generate the file to get those properties onto your ArcGIS for your community. Go back to main menu. So the same thing down here is the same thing at the top. So main menu takes you back to the main page. Your file option, there you could add a new property, add new residential assessment, add non-residential assessment, view your recent assessments. You could save, go to main menu, view and search, or you could exit out. Your tools is this is where you have the latitude and latitude on. So basically, this is how the software is validating that that particular structure that you selected, is it in the correct state? Or is it completely, you meant for it to be in Tennessee, but you end up putting Wisconsin latitude and longitude. The software is going to flag that. If you have any SD notes, you could add it in there. User preference, if you want auto spell check on or off. So like I could put on here. So depending on what you want to do, you have user preference for what you want to do and stuff like that. Custom fields, if you want to add any custom fields, you can. Database functions, if you want to update the name. So if I want to update my name and say Julius database, I could do that. I could update it. And then say your database name has been updated. So now it's called Julius database. If you on the bulk editor, enter default data, reset server database location, search, replace, delete all SD data. If you hit delete, I always say make sure you back up everything, because once it's gone and you call me and say, hey, Julius, I accidentally deleted it, I'm like, I cannot help you. I cannot get back your data. So the good thing about this tool, it will ask you, are you sure you want to delete it? Because once it's gone, there's no coming back. So you could select what you want to delete, or you could delete everything. But the key is, before you delete something, make sure you export it out before you hit delete. Then you have your import export function, import SDE, export, enterprise import, generate file latitude, longitude. You have your reports, and then you have your help with the user manual or web references. All right, so what we're gonna do now, we're gonna do the property we did for Peggy Curtis. We're gonna go through the assessment, get to the final thing, show you the reports. Then I'm gonna delete everything out of the tool, and then I'm gonna show you how to bring back all the properties into the tool via the Excel spreadsheet, because that will save you a lot of time when it comes to doing substantial damage. Because the key thing for the tool is that you could pre-populate your properties into the tool. So whenever there's a damage, whether it's from a flooding, an earthquake, a tornado, you already have the first part of the tool completed with the property information. All you have to do now is just go out there and assess that particular property and determine is it substantially damaged or not. All right, so remember, Peggy Curtis was a residential property, so we're gonna click on add new residential assessment. So I'm gonna click on the house, then I'm gonna click on Peggy Curtis, then I'm gonna use selected property. The software is gonna load. Give it some time. I know everything wants to move fast, but the SD tool does take a little bit of minutes. So if it's loading, don't keep on clicking on stuff. Just let it do its thing. It will get to the next part of it. Especially as you add more and more properties and assessments, the tool tends to get a little bit kind of slows down a little bit. So I just ask for your patience. Don't keep clicking stuff because you're going to crash the tool. So there's no limit on how many properties and assessments you can have in the tool. The most I've had in this tool was maybe over 2,000 properties. So there's no limit or maximum that I'm aware of. But if there is, I'll let you know. But from my experience, I haven't hit a threshold for where the tool will stop adding new properties and assessment. So we have Peggy's information in the information. So on the left-hand side, you could see there's no folder available because we haven't added a property folder for Peggy's Curtis property. Only thing we have is the owner's name. We have her address. We have the city. We have the state. We don't have a damage date because we haven't filled out that information yet. We don't have an assessment date because we haven't done the assessment. We just opened up the tool. We're in the process of putting in that information. We don't have a percentage damage. It's at 0%. So the first column at the top, you're going to see six different headings. You have your address. That's going to have your subdivision community information. You have your structure address. You have a mailing address, so you know where to notify Peggy of her results from your SD assessment, and then your custom fields. The second tab is called your structure damage NFIP information. So this is where you're going to have your structure attributes, your inspector and damage information, and then your community information. And you notice your community information is already populated because you already had put that stuff in when you did Peggy's property information. Then you have your cost tab, which is basically where you're going to put in the square footage, the base cost. And remember I said the question marks? So if you click on the question mark, that's your help in the tool that's already built in for you. So your base cost is what's the price per square feet to build a residential or non-residential in Nashville. So if the price per square foot is, let's say, $175 per square foot, you put in 175. Geographic adjustment means that different parts of the country cost more to build and live. So the national average for the tool is just put in one. If you know specifically for your area, put it in there. But typically for best practice, I say use one as the national average. The software tells you, the tool tells you, use one for the national average. Total square footage of the building, you put it in here, it's going to give you that cost. Now, if there's anything additional to that property that adds to this value, you could add it in here as well for additional adjustments. Then on your right-hand side, you have your computer cache value. So once you have figured out the base cost, the square footage is going to give you a cost value, the dollar value. On your right-hand side, it's going to compute your cash value. When you add in all your adjustments, if you have additional adjustments, it's going to come up as total adjustments, your replacement cost per square feet, and your cost data reference. Your cost data reference is basically saying, hey, I'm using local information. Your cost data there is when did you get that information? I got it today, I got it last week. Your depreciation rate is going to ask you, okay, remember, we're only looking at the the value of that structure and all the damages before the damage occurred to that structure. So how was that structure before the damage occurred to it? Was it in very poor condition? Did it require extensive repairs, require some repairs, average condition, above average condition, excellent condition, or other? If you click on other, you have to give an explanation. But the software kind of gives you like, hey, 7 different options to select from, because each one of them is going to have a different percentage that's going to affect the computed cash value. So once you select one of them, then it's going to give you that percentage, then it's going to give you a computed cash value that you can use for the pre-market value of that structure. So remember the 50% rule. You got to figure out the cost of the damages, repairs, divide by its pre-market value, gives you that 50% threshold. Is it at above 50% substantial damage? If it's less than that, then it's not substantially damaged. Then you have your element percentages. So remember when I talked about the element array, this is what's going to come in. So you see element from foundation to HVAC. So this is why the second PowerPoint presentation was needed before we get into the tool, because you need to understand for residential building, you're going to be assessing from foundation all the way to HVAC. So you have your different elements versus residential versus non-residential. So remember, residential has 12, non-residential has 7. Then you have your column for percentage damage. So this is where when you go out there and assess the building, you're going to be looking at the different elements and come up with a percentage damage from 0 to 100. And this is why I recommend use increments of 5. It's just easier to understand, easier to explain versus a 0.2%, a 0.8%. Just use increments of 5. 0 to 100. You cannot go above 100 and you cannot go below 0. So remember 0 to 100. Then you see the element percentage. So basically, once you have figured out the value of that structure, the software is automatically going to calculate with the algorithms in the tool, is going to give you a breakdown that says, hey, the foundation makes up 11.9% of the total value. Superstructure makes up 13.3%. Roof covering, exterior finish, all those numbers going to add up to 100, but it's just going to give you a breakdown for each of those element percentage. Every structure is going to have a different element percentage array. So no two structures are going to be the same unless they have the same value. Then you're going to have your element cost. So once you start plugging in your percentage, if I say the foundation is 25% damage, it's basically going to give me out of that 25% and the element cost. So let's say the element cost for foundation is $10,000. When I plug in 10% or 25%, then it's going to give me the damage value. So this is how the software comes up with a dollar value for you, and then it's going to calculate the total computer damages based on the percentage that you put in. That's the only part in the element percentage that you have to fill out is the percentage damage. Everything else, the software will calculate for you based on what you plug in over here. Then you go to your output summary. So this is where the optional user information comes into place. So it's going to ask you to be consistent and equity. Local officials are responsible for substantial damage determinations are strongly encouraged to select one method for each, determine the structure values and repair costs, and to use the same selected methods for the entire community. So when I talked about in the first presentation, be consistent. You have your SD process in place. Whatever you're going to use for the basis for the value, so if you're going to use a computer cash value, professional market appraisal, or the adjusted tax assessed value, you have to use that for every single property for the pre-market value. Same thing for the cost of repairs, computer damages, contractor estimate, community estimate. So typically the default option in the tool is going to be the computer cash value with the computer damages. If you don't want to use the computer cash value and you want to use the adjusted tax assessed value, use the tax assessed value with the computer damages. You just need to be consistent. The only other time that the professional market appraisal more likely is going to come into place is if you have an appeal from the homeowner. I'm not telling you to go out there for every property and get a professional market appraisal. A professional market appraisal will always going to be your best value because that's somebody that's licensed in the state of Tennessee that's going to go out there and assess the value based on the criteria to determine a professional market appraisal and give you that information. But that only comes into place if a homeowner is challenging you or appealing your decision because they don't agree that the building should be substantial damage. Or some people may want to be substantial damage because they know about ICC, increased cost of compliance, and they want to get that extra $30,000 within their mortgage, within the insurance policy to do those mitigation measures. The adjusted tax assessed value is basically the software is going to ask you, hey, you're going to contact your county's appraisal, say, hey, I need the value of this particular structure, just the value of the structure only. They say, hey, we only assessing at 80% of its market value. So now you need to bring it up to its full 100%. So this is why it's called adjusted tax assessed value, because now you need to use a factor adjustment to bring it up to its full market value. So this is where the factor adjustment comes into place, and that's why it's called an adjusted tax assessed value. Contract estimate, if the homeowner has a contract estimate showing you all the repairs that's needed to bring that structure to its pre-damage condition, use the contractor estimate. If you have a community estimate that you don't want to use the computer damages, you could utilize that as well too. But the two default options are going to be the computer cash value with the community damages. Majority of communities end up using the tax assessed value with the computer damages across the board for their processes when it comes to assessing buildings, whether it's residential, non-residential, for substantial damage compliance. Then that's where you plug in all your user information. As it says, optional. You don't have to do it if you don't have it. Then you have your damage summary, you have your percentage, and then as you fill this stuff out, the left hand of the screen is going to change as well. Then you get to your photos. This is where you could upload a photo from your file. So I click on here, and then I find my photos, upload it. You could edit your photos, add a description. Once you add a photo, it's going to ask you, do you want to use one as your default image? If you don't click the little box, you will not be able to get your default image on that screen where it says no photo available. Then you hit save. I said, be sure to save your assessment. In order to generate a report, you have to save the assessment. If you don't save it, you will not be able to create the summary report or the detailed report. The summary report is what I call the executive summary that kind of gives you all the main information pertaining to that substantial damage determination. And the detailed report is like 5 pages long and has all the other information that went into making that determination. So I just want to kind of show you guys what the 6 different tabs are, and now we're going to start populating it. So we're going to generate the assessments for Peggy property. So if we have the lowest floor information, we could put it in. If we don't have it, leave it blank. The datum, we're going to say 1988. If you have it, if you don't have it, leave it blank. We have the community name, we have the latitude, longitude, we have the structure address, we have the owner's name, street number, street suffix, city, zip code. We're gonna add a phone number for Peggy. So we just say 202-6765-8974. And if we have a cell phone number for the property owner, you could put that in. I'm just gonna leave it blank. So then I'm gonna say Peggy lives at the same address that she's gonna get her mail. Maybe Peggy lives in a different state or she gets it at a different address. You could fill this out or check the same. So majority of property owners gonna have whatever property is gonna be the same that they live in, the same mail and address. You check that little box, it automatically populates for you, so you don't have to type it out. So now I'm gonna move to structure damage NFIP information. So I already know it's a residential because when I put in the property information from the beginning, I click residential property. Oh, I could change it in here, but I'm gonna keep it residential. Story type. So if you click on question mark, remember I said when you click on question mark, it's automatically going to take you into the tool so that you could see when it talks about the number of stories. SD tool includes an options for residential structures with either 1 or 2 or more stories. There's no option for 1.5 story residence. However, structures may be included as the inventory based on the following methodology. So if you have a 1.5 story, it kind of tells you how to go about doing it into the tool. So remember, question mark, anywhere you see in the tool will take you directly into the manual. So story type, I'm gonna say it's a 1 standard typical residence type, single family, town or row house, or manufactured house. I'm gonna select family, single family. Foundation type, I'm gonna say she has a slab on grade. So this is where the different foundation types gonna come in place. Then I'll say superstructure. I'm gonna say start frame. So this is where your start frame, common brick, ICF, masonry comes into place. So this is why I had to show you guys all these different presentations. So now when you get into the tool, you can say, oh, I see what Julius was referring to when he talked about superstructure, because you have to fill out all the stuff in order for you to make up the assessment. So then you have your roof covering. I'm gonna say shingles. Exterior finish, I'm just gonna say siding. HVAC system, I'm gonna say yes. She had heating and cooling or none. You have construction quality. So quality is basically when that structure was built. So let's say quality, don't get hold up on quality. Quality just represents, I don't know if you could see it, but it says the user must select the initial, not the current construction quality for the residents from the drop-down list. There are 5 different ranges from excellent all the way to custom built. The initial construction quality is difficult to determine based on the depreciation damage. Should select between budget, average, or good unless he or she observes something totally different. So this is kind of telling you, but the big thing to take away, it does not have a direct effect on your substantial damage determination. This is just based on just you trying to figure out when it was initially built, the quality of materials that's went into it. This is not gonna directly impact the substantial damage determination. So for quality, I'm gonna select average. If I have any specific information about the structure, I could plug it in here. So I'm gonna say house was renovated in 2015. Boom. So whatever notes you have on that particular house, you could plug it in there as well. Then you're gonna go inspect the name. So I'm gonna put in my name, Julius. So I did the inspection. I went out there and assessed the building, put in my phone number, 202-578. So this comes in handy, especially if you have multiple teams working and you need to contact somebody and say, hey, you did this assessment for Peggy Curtis, blah, blah, blah. Hey, I have some follow-up information and you just need ask you some additional questions. Assessment date. So your assessment date always has to come after the damage occurred. So you cannot pre-assess the structure. It has to come after the damage occurred. So I'm gonna say we did the assessment today, March 21st. When did the damage occur? I'm gonna say it occurred last week, Friday, March 17th. Then it's gonna ask you what caused the damage. Fire, flood and wind, seismic, wind or other. I'm gonna say it was a flood event. Or I could say damage undetermined. If I click on damage undetermined, then this box is going to say, hey, you will not be able to do anything else because you said damage undetermined. So I'm just going to show you when I click yes, what happens. Then it's going to show you and ask you, okay, why could damage not be determined? No physical damage sustained. So you went out there was no damages. It was a vacant lot. Maybe 10 years ago, there was actually a property, but you never updated your data system. So it's still showing a property, but it's actually a vacant lot. Resident refusing inspection, address doesn't exist, or other. So this came up a lot when I was in West Virginia in 2016, where they went for a whole 911 addressing. So they had the addresses at 2 different addresses. So it caused a little bit of confusion with the SD process. But so you may come with different scenarios where you went to an address, but it's not the correct address or something happened. So whatever reason why, maybe the gate was locked, you couldn't go assess the property, whatever the reason is, you could fill that out and say why you could not make the determination. For this exercise, I'm gonna unclick this box. This goes away. I'm gonna say duration of the flood. It's gonna ask you for hours or days. I'm gonna say hours. I'm gonna say, hey, it was a quick 4 hours. So depth of above the ground. So this is where your tape measure is gonna come in place. You're gonna look for the water line and see, okay, how much water came into the house. So depth above ground. So I'm gonna say it was a slab on grade, so depth above ground. I'm gonna say about 3 feet above the ground. So where the ground is to where the water line is was 3 feet. Depth above the lowest floor. So this is where you find the lowest floor measured to the water line. So because the slab on grade, it's basically gonna be about the same thing, maybe a few inches difference. So I'm just gonna say it was about, I'm gonna just say 2.5, the depth above the lowest floor. Then I have my community information. If I have any specific information, I could add it in here. Then I'm gonna go to your cost information. All right, so your base cost right now is the dollar. So if you click on it, it's gonna come a question mark. It's gonna ask you, okay, the base cost is a cost to replace the structure with a functionally equivalent structure of the same size, style, construction quality based on the current local cost of labor and materials. So I'm gonna say in Nashville, the base cost per square feet is, let's say, $115 per square foot. Geographic adjustment is basically going to tell you, hey, some parts of the country is more expensive to live than other parts. So it says geographic adjustments, a factor greater than 1 that indicates higher than national average. Construction costs, whereas a factor below 1 indicate lower than average costs. For software purposes, we use 1 because that's the national average. So I'm gonna use 1 square footage. You see it's graded out. So I'm gonna click on the calculator and I'm gonna put in the square footage. So you have the option where you could select the shape. The best recommendation, best practice is just enter it manually. So I'm just gonna tap in the square footage. I'm gonna say 1800. Let me just put it. Let's put in 2450 as a total square footage. I'm gonna hit save. Now I have it in here. Then I'm gonna hit save and close. So now you see you have a base cost, you have your geographic adjustment, you have your total square footage, you have a cost of 281,750. I'm not going to add any additional adjustments. If I had it in here, I would add it in here, the name, quantity, the cost, then will come up total adjustments, replacement cost. But this is kind of telling you what is the replacement cost based on the square footage and the labor cost of materials for right now. So now cost data reference, I'm going to say local. Data date, I'm gonna say I got it today, the 21st. Depreciation rating, so now it's gonna ask you, okay, very poor condition that requires extensive repairs, requires some repairs. So this is you trying to figure out before the damage occurred to that structure, what was the um, how did the structure was. So I'm gonna say this one was above average condition. So now I have a depreciation percentage of 24.2%. So now my computed cash value, when I factor in the depreciation, comes up to 231. You see the replacement cost at 281, but then when I factor in the depreciation, the computed cash value that you can use for the pre-market value is now at 231,5650. If you click on question mark, the software is going to open up to you and it's going to tell you. I know you guys kind of small to see. Let me see if I could zoom in a little bit. Let me see if I could zoom in a little bit so you guys could see. So now you could see the software is going to ask you, okay, depreciation rating. So it says the cost tab also requires the user to enter the depreciation rating for the structure. The SD tool includes a depreciation methodology that is based on the Army Corps of Engineers methodology. It's 1 to 6, with 1 being the lowest and 6 being the highest, or you click order and it kind of tells you which each one represents. So a rating of 1 means it's very poor condition, the structure is dilapidated, it was falling apart, uninhabitable, most likely abandoned. 2 requires extensive repairs. 3 requires some repairs. 4 average condition, or 5 above average condition. And then you have 6, which is excellent condition, was most likely recently built within 2 years or less. And order, if you want to use a different one, then you have to provide an explanation if you clicked on order for the depreciation. I'm gonna hit close. So I clicked on average condition, and now I'm gonna go to element percentages. So here is where we're gonna plug in. So now, because we have populated the cost field, now we could go to the element percentages. And remember what I said, the only part of this column you have to fill out is the percentage damage from 0 to 100. So now you have your element percentage breakout. So you have your foundation makes up 8% of your total replacement cost at 281. So now the foundation makes up $22,540. When you add up each of those element costs, you're going to get the total replacement cost of 281. So this is kind of giving you a breakdown, showing you what each of the element cost is. When you add them all up, how you get to the 281 in the software. So now you have your percentage. So I'm just going to say this is a slab on grade. It was a flood, no damage. Okay, the foundation, I'm going to leave it 0. Superstructure, I'm going to say they had about 25%. I'm just going to make up some numbers. Roof covering, I said no damage. Exterior finish, I'm gonna say about 35%. So if you notice, once I start typing in the percentages, if you look on the left-hand side, you see the percentage damage now at 8.5%. And then as you plug in the percentage damage, you have your superstructure at 25%. So 25% of the element percentage of 15.9% of 44,798.25 cents. The damage value all based on the 25% damage is a damage value of $11,199.56. So as you go along, you're going to see the software is calculating the damage value for you. So at the very end, it's going to give you total computed damages. So doors and windows, I'm just going to say 20%. Cabinets and countertops, I'm going to say 25%. Floor finish, I'm going to say, just put 100%, just show you what it looks like. Plumbing, I'm just going to say 20%. Electrical, let's say 35%. Appliances, building appliances, I'm going to say about 10%. Interior finish, let's say 35. HVAC, was elevated, the outside unit got damaged, some of the ductwork, I'm just gonna say about 50%. So now you notice once I put in all those percentages, you now have a total computed damages. And if you have no damages for an element, you don't have to put in a value. That's why I said 0 to 100. So now you have your total damages of 84,341 and 86 cents. Percentage damage 39.5%. So now we have filled out, this is what you're collecting when you go out there and assess the building. You're collecting the percentage damage. I'm also going to give you guys SD worksheet that's basically tailor-made for this software. So that way you could just have a one-pager front and back to collect all this information that you're going to plug into the tool. Okay, output summary. So this is where you could change it up if you want to change it up if you want to, or you could use a default value. So for this option, I'm going to show you what the enter data looks like. So for the professional appraisal, I'm going to say Peggy had a professional appraisal that because she's going to sell a house, and then she hired the appraisal to give a value so she knows what to put on the market. So it came back at $350,000. So I got the professional market appraisal. Now I want to add the tax assessed value. Let's say it was assessed at $250,000, but it wasn't assessed as its full market value. So if I want to raise it, if you click on the question mark again, you could raise the value of the assessment. So if I want to raise the tax assessed value, you could go into the tool, and this section tells you right here. Let me zoom in. It says right here when it says the factor adjustment. So if the adjusted tax assessed value is based solely on the structure, a local based adjustment factor may be required to increase the value to its market value because the tax assessed value tends to be less than the computed as cash value or market value. So the adjustment may be made using the factor adjustment. So basically, the factor likely will be higher than 1.0, so it should be entered with 2 decimal places. So for example, if you want to increase the assessed value by 43%, you would input a value of 1.43. So now I'm gonna go back, and let's say I want to increase the assessed value by 20%. I'm gonna type in 1.20. So now I have adjusted taxes value of $300,000 because I increased it by 20%. So now I have a contractor estimate. I'm just plugging it in. She got a contractor estimate. It came back at $75,000. The community calculated their own community estimate. It came in at $68,000. So now I'm going to show you how you could use different values for the value of the structure versus the computed cost of repair / improvement. So right now, the default option is always going to be the computed cash value with the computed damages. Now, if I wanted to use a professional market appraisal of $350,000 with the computed damages, if you look to the left-hand side, you now see that the percentage changed from initially it was 39.5% to now it's 24.1%. If I want to use a professional market appraisal with the contractor estimate, my percentage changed to 21.4. If I want to use a professional market appraisal with the community estimate of $68,000, now I have a percentage damage of 19.4%. Same thing, if I want to go back and use the adjusted tax assessed value with the community estimate, I have 22.7%. And one is the adjusted assessed value of 300,000 with the contractor estimate of 75,000. I have a percentage damage of 25%. If I wanted to use the tax assessed value with the computed damages, now I have 28.1%. So majority of the times, communities tend to use the adjusted tax assessed value with the computed damages. So for this example, we're going to use the adjusted tax assessed value of $300,000 with the computed damages, going to give us a percentage damage of 21.1%. So our computed damages is $84,341.86. So now we're going to go into a photo option. So whatever you use, just be consistent. Professional market appraisal is going to come in handy for appeals. Contractor estimate, same thing for appeals. But when you're doing your initial assessment, the more likely option that communities tend to use is going to be computed cash value or the adjusted tax assessed value with the computed damages. Because majority of the time, you're not going to have a contractor estimate. So the computed damages give you a ballpark range of what the damages are based on what you plugged in from your percentages damage. So now we're going to go to our photos. I'm going to go into select photo. I'm going to go into my sample photos. I'm going to select on this house, SD House 5, hit open. Now my photo has been uploaded. So now I'm going to click on use this photo as my default image. So now I clicked on it. Now I have my photo up here. I'm going to select another photo. I'm going to go to house 1, hit open. Photo's going to load. 2 was loaded, but you see I could either make either one my default image. So if I switch it, but like I said, at least have a minimum of 2 photos into the tool. So now I'm going to hit check spelling. Spell check is complete. Then I'm going to hit save. So boom. So now you notice you're going to get error messages. So once you hit save, this is going to pop up. So basically what this is going to tell you is everything in yellow says your latitude was not within the state you selected, your longitude wasn't within the state. So your latitude and longitude needs to correspond with the state that you selected. So if you selected Tennessee, the latitude and longitude for that property has to be in the state of Tennessee. So you could either address the error warnings, you could close assessment without saving, or you could hit save. So I'm going to go back and hit address error on my warnings. So I'm going to go back. I'm going to go to address, and then I'm going to, so it tells you where the push pins are. So Amy, I need your help again. Give me the latitude and longitude for Tennessee.
86.2345.
Okay. Give me longitude.
6, and then negative 75.78901.
I don't think that's going to be in Tennessee, though.
Oh, well, I don't. I know
good.
it's 86, but I don't remember.
All right, let me
for
just try
left.
it. Let me just try it. Let me see. Let me just try 74. Let's see what happens. All right, I'm just gonna hit save again. It's gonna say same thing, but it's okay. I'm just gonna hit save. Spell check is complete because the system will let me save it because a yellow pin. If it was a red pin, it would not let me save it. So yellow and green pins, you could save the assessment. Red pins, it will not let you save it. So now you see, because we saved the assessment, we have the damage date. That time, it just populates. It just gives you a random time. I don't know why it does that. It just does. You have your assessment date, your percentage damage, you have your photo, address, and then now if you look at the bottom, you have your total number of properties 14, and our assessments changed from 3 to 4. So now I'm gonna go into print the summary report. And then once you print the summary report, you're going to get what I call the executive summary. This is basically going to give you a summary of all the main information that you need regarding Miss Peggy Curtis property on 7895 Howard Avenue. Subdivision, community name, CID information, structure address, year of construction, residence type, quality, the date of the assessment, what caused the damage, resident information. So remember I told whatever you plug into the tool will automatically show up in the report. So house was renovated in 2015, inspector's name, inspector's phone number, what caused the damage, how long was it, depth above the lowest floor, 2.5. Then you have your NFIP information. Sometimes the suffix doesn't populate. That does happen. It's just a glitch in the software. Percentage damage. So we use the adjusted tax assessed value with the computer damages told us based on those two numbers we selected, if this structure is not substantially damaged. You have your damage summary. So everything that was plugged in that's automatically calculated is going to be captured in here for you. And then you have at the bottom all the additional information we plugged in, like the professional market appraisal, um, assessed value with the adjustment factor, contract estimate, community estimate, and boom, you have your signature line, your name, and the date of the report, Tuesday, March 21st, 2023. And then you could save it as Excel, PDF, Word document. You could print it. It's really up to you what you want to do with it. So I'm gonna hit close over here. So if I go on print detail report, this is the whole report. This one is 5 pages long. It's going to give you all the information, structure address, mailing address, the 2 photos of the property. So that's why I say you need a minimum of 2 photos when you're doing the SD tool, because you're going to need the default image plus an additional image. If not, it's going to show up blank. And you notice at the bottom of every report is going to have the address. So you have 7895. So there's no way you're going to misplace a report because all the pages is going to have the address at the bottom. Page 1, the date. You go to page 2, you're going to have all the structure information. So everything that you plugged into the tool is going to show up in here for you on the detailed report. And then scroll down, CID information, any custom fields will populate in here as well. Scroll down again, and then you have page 2, address, date. Page 3, you have your square footage, geographic adjustment, base cost per square feet, cost adjustments, additional adjustments, computer cash value, and then same thing again, date, address, page number, report 4. So remember, all the information we plugged in shows up in here for you. So all the percentage damage, element percentage array, element cost damage value is all gonna be on page 4, date, address, and then the last page, page 5, is going to give you substantially damage summary, optional data information, your signature, name, date, page number, address, and page 5 out of 5. So this is a detailed report that generates for every single property. So you have the option of the print the summary report or the detailed report. So we already have this saved. So I'm gonna hit main menu. Now I'm gonna go and view and search all records. So now you remember we had those 3 additional properties. Now we have the new one for Peggy. So now if you look at the 7895, this was the one we did for Peggy because that was the one I just demonstrated for you guys, where you could view the property information, delete it, view and edit the assessment, or delete the assessment. So now if I want to look at just residential, I'll click residential, hit filter, and now I will only see Peggy Curtis property. So now what I'm gonna do now for you guys is that, remember we have 4 property assessments, 14 properties. So now what I'm gonna do is I'm gonna delete everything off the software. So the next thing I'm gonna show you guys is how to upload a property with multiple properties on Excel spreadsheet instead of individually. So now where you can see how the import functions work with the Excel file. So what I'm gonna do now is I'm gonna go on database functions. I'm gonna hit delete all SD data. I'm gonna select delete all, so all SD data, all default values, all enterprise settings, all delete notes. Then I'm gonna hit delete all, hit delete. The software is gonna ask you, you have selected to delete all your records. Once deleted, it cannot be undone. Do you wish to delete records? So you cannot say, hey, the software went rogue and deleted all my information. You literally have to go for these functions to delete it, everything off the tool. So I'm like, yes, I want to delete everything. So now it says all data has been successfully deleted from the software. I'm gonna hit OK. So now everything is completely gone off the tool now. So like this bumps up on me because it said, hey, I've deleted files. What happens to it from my computer? So now if I go back to view and search records, there's nothing in here at all. So I have 0 total number of records. I have 0. If I do a filter, nothing comes up because there's nothing in here. So I'm gonna go back to main menu. I'm gonna go on import export functions. Then I'm gonna click on enterprise import and I'm gonna bring it in. So what I'm gonna show you guys what is how I'm gonna bring all the tools in. So now I'm gonna go into SD Roadshow. So basically, this is the Excel spreadsheet. I'm gonna take this Excel spreadsheet. It has 15 properties. You see, it has first name, last name, phone number, street name, street suffix, post geographic location. So the thing about the Excel spreadsheet and the tool, you're gonna have all these column headings from first name all the way to, sorry, computer's freezing right now. It's gonna go all the way down to regulatory floodway. If you don't have any information for particular column, leave it blank in the Excel spreadsheet and leave it blank into the tool when you're uploading it. If you have maybe one property of information, either delete it for that individual property or add in dummy data into the file in order for you to upload. If you don't do that, the software is going to crash itself and it will not import those properties for you. So this Excel spreadsheet has from first name all the way to the very end where it says regulatory floodway. And you notice some of the fields are not populated. We're not gonna match those fields into the Excel, into the tool upload. We're just gonna leave them blank. So everything that's in here is what's gonna be uploaded into the property, into the SD tool. So I'm gonna minimize. I'm gonna go back to the tool. I'm gonna go back to the enterprise import. Let me close out the Excel spreadsheet. So now I'm gonna go get my file. So now I'm gonna go back into my Tennessee folder and then I'm gonna find my spreadsheet. So now I'm gonna do whatever's Excel spreadsheet, whatever you name it. So I'm gonna click on SD Roadshow, Training Tennessee, hit open. It says your file has been loaded successfully. So boom, is gonna ask you, hey, you need to format your Excel spreadsheet. So you wanna click yes. Does your Excel spreadsheet has column headers? You're gonna click yes. So now this is everything that's in the Excel spreadsheet. So what we're gonna do is that we're gonna map all that information into the tool. But remember when I said, you see our post geographic location apartment, we have a couple fields as blank, subdivision, lot number, first floor elevation. There's nothing in the Excel spreadsheet, so we're not gonna map any of those columns into the tool. So I'm gonna scroll down and then you remember, don't skip this step right here. You need to click, I'm gonna use the table above to map my data. So what we're gonna do is basically we're gonna tell the software, hey, I want you to map all those column headers into the tool so I could get all those 15 properties uploaded into the Excel, into the SD tool. So I'm gonna click on use a map data. So I'm gonna get yes, import columns has been populated in the selected fields. So once you click on that option, Now we're going to go in here and we're going to map out the data. So this is where you want to be careful that you don't want to kind of get ahead of yourself, because if you don't do this correctly, you will not be able to map the information into the tool. So 1 second, everybody. All right. So let's start out with the owner's first name. So we're going to select a field. We're going to select first name, and basically we're going to select process. So basically what we're going to tell the software is that, hey, you see how it says first name from Ben all the way to Ron. We're going to tell the software, hey, I want you to read the first name and then I want you to map it. But for the processing, you're going to select John. That's just a default option. Select John. You're going to do the same thing for owner's last name. You're going to select last name. Processing, you're going to select Doe. Don't select Doe John or John Doe. Every field gets its own column heading. Phone number, we're going to select phone number with phone number. Street number, this is an area where people tend to mess up a lot, is between street number and street suffix. So for the selected field, we're going to select street number, and we're going to select for a person, we're going to select street number. Don't select street number, street name with suffix. You're only going to select street number with street number. Then you're going to select street name, so find street name, and then you're going to select your person, and you're going to select street name just with street name. So remember, street name with street name. So don't select street name without suffix. Just select street name you want to select. So we got street number, we have street name, and street name without suffix, because we're gonna have street suffix over here. So select street suffix with street suffix. Because what we're telling the software is that, hey, street name and then street suffix is 2 different columns. So post geographic, we have nothing in there. We're gonna leave it blank. Apartment, we have it blank. So we're gonna go to city and we're gonna select city. We're gonna go to state. We're gonna find state. Don't worry about selecting Tennessee, because Tennessee is already in the Excel spreadsheet. This is just telling you, read the column header, and everything that's in that particular column will be mapped into it. County with county, and then we're gonna select zip with zip. So double check everything, zip with zip, county with county, state with state, city with city. Apartment, we have nothing, leave it blank. Geographic, leave it blank. Street suffix, so we have street suffix with street suffix. Street name without suffix. Street number, phone number, last name with Doe, and then first name with John. All right, we're gonna go to the second row. We're gonna select CID. So CID, community name with com name. We're gonna select latitude. So we're gonna find lat and scroll up. And then we're gonna find longitude with longitude. So let's find longitude. And then we're gonna find subdivision is blank. We had parcel information, and you could always double check. So just scroll up if you don't remember. Scroll up. Okay, did we have anything for parcel? We did. We had subdivision and lot was blank. So remember, don't populate anything in those fields. So we're gonna scroll down to the third row. We're gonna select parcel number. We'll find parcel number. So and then we have lot number, leave it blank. We had datum information, so we're gonna scroll down, find datum, and then we're gonna find first floor elevation and find first floor elevation. All right, so now we're gonna make sure everything is good. So we have scroll down a little bit. So we have CID with CID, community name, latitude, subdivision blank, parcel, lot blank, datum with datum, first floor elevation, first floor elevation. So now we're gonna go to a final row. So this is where the software is going to separate residential from non-residential. So you're going to select a field, you're going to select res, so scroll down, find res or non-res, year of construction, scroll down, find year of construction, it's going to say year of con, total square footage, scroll down, total square footage, find your firm panel. So you're going to find firm panel. We're going to find our firm zone, keep scrolling to your right. Find your firm zone. Then you have your data of your firm panel. So find data firm panel. We're gonna find suffix. We're gonna find base flood elevation with BFE. So scroll down, find BFE, and then your final one is regulatory floodway. So now, if you're confident, you're like, hey, I checked everything looks good. You're gonna hit proceed, and then you're gonna hit import data. If we did this correctly, it should import 15 out of 15 properties from the Excel spreadsheet. Boom. We got 15 out of 15 records were wrote into the database. All right, so I'm gonna hit OK. So now this is what it's gonna ask you. So if you don't want to do this every single time from an Excel spreadsheet, you could save those enterprise import settings
into your tool. So next Excel spreadsheet, you don't have to keep mapping every single time. So I'm gonna hit yes. So now that I hit save, so it's gone, it knows next Excel spreadsheet. I'm just gonna hit on my map settings and boom, it's in there. So now if you look at the bottom, I now have 15 properties I will map via the Excel spreadsheet. And I hit view and search all records. And then I'm gonna hit properties only, hit filter. And then there goes the 15 properties that I just uploaded via the Excel spreadsheet. So if I click on one of the properties, I have Fred Jones and it came from the Excel spreadsheet. So this is the fastest way to upload properties into the tool. I'm gonna send you guys instructions on how to map all this information. I have an SOP written out so you don't have to remember how to do this. But so this is kind of the nutshell, a quick 2-hour presentation. This typically is a half a day. I just want to kind of give you guys an overview of how the tool operates and let you know, hey, for substantial damage, you're not by yourself. FEMA has this great tool that's designed to help local officials do substantial damage. All right, I know a little bit, 10 minutes over, so I'm gonna open up for questions or anything in the chat. Amy, you want to let me know or anything for anybody?
Okay, so Mike Howell had a question about get a copy of the Excel spreadsheet, but I said
Yeah.
that was part of the SDE tool.
No, the Excel spreadsheet. So that's a custom one that I created. So everything that I've shown you today, you get a copy of it because you will not be able to find it online or find it in the tool.
Okay. We also had a question about whether or not you would be willing to come up to Tennessee and do a demonstration for SDE.
So the plan is once Amy and I start figuring out our travel for the year and to kind of figure out our training plan, what type of training we want to do. So that could be an option to kind of do a roadshow through the state, because this is a training that basically when I've done it in the past to support states is we kind of did a roadshow in different parts of a state, whether it was the south, the north, the middle, and actually did it at either a community center or library where folks could bring their laptops or they could use the computers in the library and download the software and actually use the tool and practice with the tool. Because the only way you're going to learn how to use this tool, you actually have to be in a training and have the software open and following along as I show you how to do it. So yeah, so that is an option for this year for us to do some type of SDE roadshow throughout the state, maybe in the West, Middle, and East. But that's something Amy and I will have to sit down and kind of come up with a plan. And if we do organize it, we'll let you guys know.
Yeah, I kind of feel like since we're the volunteer state that it would be nice if we well, you know what I'm saying? It would be nice if we had some volunteers so that if there was a flood disaster statewide that we could have a volunteer group that could go out and help other communities. You know, if I'm a floodplain administrator and I have 500 homes that are damaged from a flood event, there's no way that I can do it all myself. So that's something that I've wanted to do for a long time. So hopefully we could have something like that enacted later on this year, get some volunteers and get a group together.
Any additional questions? All right, so while I still have you guys, I'm gonna show you guys what the documents look like. So remember I told you I'm gonna send you some documents to help you guys with this SD stuff. So everything I gave you is stuff I have used in the field, things that not all the stuff I didn't create all of them. I have just kind of modified them to kind of over my years of utilizing the documents. So but this is some of the resources I'm going to show you guys that I'm going to send out to you guys so you can see the different resources that you could utilize for SD. So with the tool, remember you're gonna have to use a worksheet to calculate all that information. The tool gives you a worksheet, but it's super long. It's like 7-8 pages long. This is a condensed version. This is a fillable PDF, which basically you could type it out or print it out. And when you go out there to assess that particular property, if you guys see in my screen, you see it says residential worksheet. You get inspection number, folder number, assessor's name, date, latitude, longitude, address information. You check all this stuff out. Same thing that you saw in the tool, structure attributes, residence type, foundation, superstructure, roof covering. So everything that you see, you basically is gonna fill this stuff out in front of the property, figure out the depreciation rate in, and then element percentages. And you take that worksheet and you plug it into the tool. There's one for residential and there's one for non-residential. So in that way, you have a document that's front and back. So if you print out, let's say if you go in 50 assessments, you could print out this document front and back and be able to go out and assess the building and take all that information and just plug it into the tool. The other document I'm going to show you, this is the SOP on how to import the data from a spreadsheet into the SD tool. So what I showed you guys how to do it, I've been doing this for a long time now, so it's just automatic on how to import the data correctly. But I created this SOP document to kind of walk you guys through it, so you know how to take the Excel spreadsheet and upload it into the tool. And I'll send you guys a blank SD document for the Excel spreadsheet that you could use for your community in order for you to put all your properties into the Excel spreadsheet and upload it into the tool. So you will have all that information as well too. And there's another SOP on how to export the data out of the tool as well too. So you guys will get a copy of all those information as well too. So in that way, you kind of get a head start with substantial damage and you're not starting from scratch. Any other questions, comments, feedback from anybody? I was trying to keep us within the 2 hours, Amy. So.
No, I think you did great. Appreciate everybody that's been on this training this morning. We really try hard to do topics that you need as a local floodplain administrator to equip you. So we will send out a copy of the presentations, the Excel spreadsheets. And then for those of you that want a certificate, please email me. You got everybody has my email. So just email me, you'll get a certificate. We'll send out everything. Keep in mind that I am by myself for quite a while yet. So if you need something that's a little bit delayed, just know that you're on the list and folks will I'll get to you when I can. So just please be patient with me. I appreciate it.
All right. If not, we see you guys next month for the next topic. And we'll let you guys know once we get the SD stuff in the works and once Amy and I get together. So, but other than that, thank you guys and see you next time.